This quick start path is best for landlords who exclusively manage their own units. If you manage a combination of your own units and units for others, it's best to follow quick start path A. We won't cover everything, but we'll give you a brief overview. Let's get into it. Before we start adding units, properties, and people, we want to set our management mode. Harmony defaults to Others mode, allowing you to create different ownership and management for units. However, if you are the only owner, and all the management is done for you alone, switch this to Self. Go to Settings, and select My Account. Select Preferences, then Self, for the type of management you do. After this, everything you add will automatically be connected to a single owner with a single management agreement. If you plan to offer your management services to other owners, skip this, and manually add the units you own to your management agreement. Select the help tip on the setting for more details. Step 1. Add a unit. Select Places, then select the Add icon for the type of unit you want to add. If the basic or all fields form definitions aren't what you want, set up your own form definitions in Settings, Places. Form definitions determine which unit fields you can enter, and which display to the public. Since we can change the definition on this unit later, we'll just use the basic definition for now. Let's take another side trip to learn about owners and management agreements for self-management. Harmony assumes you want to run your landlording business the way the gurus advise. This means you structure the business so that you act in two different roles. One is the management company that does the work and gets paid for it. The other is the investor who receives the benefits of their real estate investments. Again, both are you, but you're occupying two different roles. Harmony separates and tracks these independently so you'll always know how much your landlording business is costing, how much it's earning, and where you'd be if you chose to focus more on either side of the landlording business. For a deeper dive on this, check out resources in places like BiggerPockets and Rich Dad Education. For now, just recognize that you, the landlord as a management company, is representing you, the owner/investor, under the terms of the management agreement you've established with yourself. Many landlords have a slight variation on this same theme. Although you're in two roles, the roles are legally distinct. This is the case when you're the manager, but the real estate investments are held in an LLC or trust. In this case, you'll want to be sure to add the actual legal ownership entity as the owner, and enter into a bona fide management agreement with this entity under your negotiated terms. Step 2. Add the owner, either yourself, or the ownership entity if it is different. Step 2A. Owner Profile. Select Management, then select the Add icon for owners. Once your owner information has been entered, you'll be prompted to add your management agreement. Step 2B. Management Agreement. Enter the parameters for your management agreement. Most landlords opt to use typical local industry standards for their self-management agreement. This gives you the benefit of understanding the true costs of management, giving you a running total of what management would cost, and what your investment would earn, if you outsource management. If you're managing for your LLC or trust, be sure the parameters are those that you've negotiated with that entity for legal and tax purposes. Once you've entered the management agreement parameters, you can create a management agreement form. We haven't loaded in our management agreement form template yet, so make a note that you want to do this, optionally with the help of your onboarding rep. Step 3. Add the tenant or guest. Step 3A. Tenant or guest profile. Select Management, then select the Add icon for tenants or guests. For this demo, we'll add a tenant. Once the tenant has been entered, you'll be prompted to add their lease agreement. The type/class of the tenant will determine their default lease agreement type. In our demo, we don't have commercial or storage management enabled, so our only option is a residential lease. Step 3B. Lease Agreement. Enter the parameters for this lease agreement. We'll skip setting up default values for now, and come back to it later. Once you've entered the agreement parameters, you can create the agreement form and send to the tenant for their e-signature. Just like with management agreements, we haven't loaded in our lease agreement form yet, but we'll want to before we have our first real tenant. You can have as many lease agreement form templates as you need, although most landlords have just one, and then have different addendums that are conditionally added to the lease. Your onboarding rep can guide you through addendums and conditional inclusion. It's a pretty powerful feature that allows you to set it and forget it, and produce the perfect lease every time. Let's double-check our work with the concerns report. After you've added people and agreements, you may want to check in to see if you missed anything. Select Management, Company/Office, Reports, Concerns, to get a list of everyone with anything that might be a concern. This is something you'll look at frequently. It's going to highlight any issues to address across your business. We're going to continue, but it's important to be aware there are a ton of options when it comes to how you handle and process money in Harmony. Before you start processing transactions, take a moment to visit Settings, Money, Preferences, to familiarize yourself with the options. Each one has a help tip explaining what it does. Step 4. Set up bank accounts. Before you can write a check, process an ACH, or make a deposit, your bank accounts must be set up. Do this from Settings, Money, Chart of Accounts. You can have 1,000,000 bank accounts, but everyone starts with 3. Click or tap the bank icon beside an account for a brief explanation of the 3 accounts. Understand that as a landlord, keeping 3 accounts is advised by most experts. Even if you're not obligated to have a trust bank account, use this for all your rental investment income and expenses. The operating account is for income and expenses related to your management operations. And the security deposit account is for the security deposits you're holding, that you can't spend until the tenant moves out. Step 5. Collect money. Occupants start by paying their deposits and initial charges. Whenever you get money, select the person it's from, choose Money, then choose Receive a Payment. Deposit the money into the bank from Management, Money, Bank Deposits. Most managers automate rent collection by setting up a merchant account and accepting payments online. This is all built into Harmony and easy to set up. People can pay you through their portal, and can set up pre-approved or pre-authorized payments. Step 6. Pay yourself as the manager. If you're paying yourself for management services, you'll accrue management bills that come from rental income. When it's time to collect, choose Management, Money, Management Bills. Let's take our last side trip to learn about maintenance. Maintenance in Harmony is wildly powerful, covering everything from routine maintenance, like filter changes or fire suppression inspections, warranty service, competitive quotes, property inspections, permits, key management, occupant work requests, after-hours routing, job logs, work acceptance, appointment confirmations, and vendor work orders. It's worth taking a moment to explore this, and at a minimum understand how work orders can connect directly to owner withholds and vendor invoices. Step 7. Pay your vendors and sources. Vendors are people or companies who do work on your units. Sources are people or companies who bring you business. Add them the same way you added your owner. Add an invoice by selecting the person who is responsible for paying the bill, an owner or the management company. Vendors can see their work orders, invoices, and payments in their portal if enabled. Note that your sources may not invoice you, but expect you to pay them based on a commission agreement. Harmony has all the tools to configure and report on-source commissions. Step 8. Pay yourself as the investor. The rest of your collected money goes to the owner of the properties as the income from the real estate investments. Select Management, Money, Owner Distributions to review and pay. Harmony will warn you if there are unpaid bills or other issues to deal with, and will automatically process their distributions to the method selected in the owner's profile, then send a statement as selected. Select the Details icon or Detail view to see all this and adjust as needed. Owner statements are emailed or texted if that's set up in their profile. Statements are also permanently recorded in their document library and in their statement history. There you have it. You've just run through the fundamentals of property management in Harmony. There's lots more to look at, like automating rent payments, marketing your listings, managing your calendar, and about 1,000 more things. But that's enough for now. You've come a long way in a short time.